Robschild. No investment advice. Welcome to the show where we view financial markets using Ben Graham's investment philosophy, macro, technicals, and crystal ball gazing in that order. Today is Friday, November 15th, 2024. Today's episode, Stocks Went Down. And we will go through the charts momentarily. Nothing has changed in the daily reminders, the very important backing facts that need to be in the back of your head every day, in my opinion. If you want to hear me walk through all of these items, please watch Monday's show. For this week, that would be the 11th. So 11/11/24 is the one you're looking for. We have no new updates in daily reminders, and therefore no new updates in the crystal ball ratings, which are, number one, the S&P 500 is still currently priced like it's a Ponzi scheme, relying only on other people to bid it higher instead of any kind of safe valuation. Non-existent safe valuation, in my estimation, when things are this expensive. Also, that there's a bear market imminent, and that the Fed won't cut fast enough to save the economy. Fiscal dominance and the new fear of recent inflation won't allow them to cut fast enough to save the economy. But remember, folks, it's just a crystal ball reading. First chart of the day, the S&P 500, the SPX, going down 1.3%. I did mention yesterday that this is no longer looking very like it's a bull flag. It's looking like it's rolling over, and it continued to roll over. Notably, again, we got to that magic 6,000 psychological number, which also has a trend line that connects with the top of the dot-com bubble and the top of the 1929 stock market bubble right before the Great Crash, going into the Great Depression. This can be seen using a logarithmic version of the S&P 500. With my macro view, I'm not surprised to see breaks in markets. What I am surprised to see is when these breaks get bought and the markets go higher. The election certainly gave the market a lot of confidence, but that confidence has been very short-lived so far. I was very curious to see how long the bullishness would last, if we were just going to pump higher and higher, through the rest of the year, or if we'd have any break at all. Well, we're at least getting a break right now. And it wouldn't surprise me at all, for 1.5 million reasons, for 6,000 to be the top for potentially a long time. One way I like to look at it is, buy the rumor, sell the news. Well, the news happened. The election's over, and so, it's like, okay, so now what? Yeah. So, I guess we'll see. Junk bond spreads continuing to get tighter, even tighter today than they have been in many years, now at 2.6% difference between what you can get on a bond that is considered to be junk value. That is, and this isn't a French word, it's junk junk debt. This is debt that is not considered to be investable. And investors are only seeking 2.6% higher yield, which is very strange because when we zoom out back to the 90s, it's very, very few times in history where credit spreads get this tight between junk bonds and treasury bonds. Times like and strange. There are people purchasing these bonds, and I'm not the only person that has access to these charts that can see that oftentimes these bonds offer much, much higher yields. And right now, barely more yield compared to the amount of added risk that these bondholders are taking. In times like these, when credit spreads get extremely tight, they're described as, by many economists, as a very complacent period, which often can precede major problems in markets. such as from May of 2007 when the spread was only 2.46, and then widening to 20% yields above the Treasury rates. The CNN Fear and Greed Index has finally dropped from a greed mode. It seems like we've been in greed mode forever now, finally dropping down to a neutral stance. TLT, my favorite place to be. I have over 55% of my own portfolio, of my own, forming what I can only describe as a bottom. This looks like the bottom to me, with the RSI showing a major divergence between the price showing lower lows and lower highs, and the RSI showing higher highs and higher lows, still looking like it's trending higher, while we're sort of settling here still in TLT, with being a broadening descending wedge at the bottom of a recent drop. This is a reversal signal. This is saying that it's probably the bottom here. With stocks finally cracking here and showing a little bit of weakness, when stocks really start showing more and more bearishness and investors are looking for more safety and credit spreads widen, you can expect money to be going into long duration Treasury bonds, and we might be there now. We might actually be there. We're past the election, and stocks are overvalued, especially when considering where we are with earnings of the S&P 500 are not exceptionally high. The price of the S&P 500 is way high compared to the earnings. Plus, bond yields are not like insanely low. If bond yields were insanely low, then way higher stock valuations can make sense, but there's a huge discrepancy there. Again, for details on that, watch Monday's show. Sorry, I lost my mic. When taking all of that into account and looking deeply into my crystal ball, I can see it's time for TLT to start really showing some strength at this point. But remember, as always, folks, I don't give advice, and you're watching a guy right now talk about financial markets that's holding a crystal ball. So please take everything I say with a grain of salt, and make sure you're aware of the fact that you are very responsible for all of the decisions that you make. One of the best ways to make decisions and be happy about them, by the way, with any investing decision, is to always assume that you're wrong and be okay with being wrong when you end up being wrong. That's a very important thing to have in your mind, generally speaking. But that said, again, I'm excited about TLT here at this point. The 10-year Treasury note yield, I believe, is actually giving support to this idea. The 10-year yield, I have been wondering if we were going to get a close above the breakout candle, and we have not done that yet. We have not achieved official bullishness in the Treasury note yield, and we've been going sideways long enough that it's starting to look like there's a decent probability of us rolling over to the downside here. Again, this purple line that we're meandering above represents, I show this every show, but I'm going to show it again because how much I love it. You guys, if you watch every show, you know what I'm about to say. The high of March 2021 connected to May of 2023 being the neckline in January of 2024 makes this very beautiful head and shoulders top on the 10-year note, cracking the neckline. And then this would be considered to be the retest. So we are retesting this purple line here. We have not confirmed a breakout above. This, to me, is still a fake out, and I am expecting it to roll over to the downside, but I'm keeping a close eye on it. If we do get a daily close above the breakout candle to the upside, I'm actually going to probably shift this to a weekly candle, and I might have to reconsider my bullishness on long duration treasuries if we have like a weekly close, confirming above this line in yields. But yeah, it's just something that I'm keeping a very close eye on. Next, DXY, the dollar index. I've been talking about how this is just ripping higher and higher and higher. We finally got a little bit of a break today in the dollar, actually surprising me a little bit just because of how much weakness there is in stocks. With that much weakness in stocks, I would have actually expected the dollar to go higher, but metals are pausing a little bit today. Copper, silver, gold, they've been going down a little bit and we're pausing, and so that's probably the biggest thing, getting the dollar to basically pause a little bit here. Still definitely not looking like it's about to roll over, but yeah, it's pausing. I mean, what else can you say? It still looks bullish to me, but finally taking a pause. I did also mention yesterday how I'm like starting to get worried here, like 107. I mean, this is beyond where I thought the dollar could go in this amount of time, since October's low here at 100, when everyone else was saying we were going to head down to 80. I was thinking this could be a bottom here, and yeah, lo and behold, just huge tear to the upside in the dollar. Again, for those participants out there that think the dollar is dead, well, it ain't dead yet. In fact, it's on fire as we speak. I mentioned on yesterday's show, SMH, the Semiconductor Industry ETF, that NVIDIA's earnings were going to be coming out next Wednesday, but we were on this line and I was like thinking to myself, like, are we going to crack through this little trend line of this wedge like soon? It looks like we could, but I wouldn't expect it until maybe Wednesday, until the NVIDIA earnings come out. And oh boy, did we crack it today. We jumped over two trend lines that I had set up here. This is looking increasingly bearish. Again, I say it on every show lately. I do hold SOXS still. That's way up now. I'm still holding it because I think the fundamentals are lining up. This is an entire industry that just makes a thing that anybody can make. I can make it. No one has, like, it's not an iPhone, it's not Disney, it's not a Nike shoe. This is like copper, this is like gold. Anybody can start a company and mine it and produce it. That's how semiconductors are, and so to price them as if they have infinite value is silly. Once you have enough production, the prices will go down. They have to compete with each other. Profit margins get squished. Earnings go down significantly. And I think, again, the semiconductor is poised to become, maybe sooner than I expected, getting down to a value type of stock. Like I'm saying, they're priced like they're tech stocks, but it would make sense for them to eventually get to the point where they are value stocks. And I think we may be headed there. Anyway, again, Head and Shoulders top, at the very top, all-time high of this industry. Every top of the pattern, the left shoulder, the head, the right shoulder, with a very scary looking engulfing red candle sending the market soaring down, the white whale double engulfing candle at the head of it. This is like the most beautiful, picture perfect pattern of a Head and Shoulders that like I've probably ever seen. And then the right shoulder again, this giant engulfing candle. And then today is really the first day that we're showing legs to the downside, breaking through two major recent trend lines. Also, by the way, this is clearly like a Head and Shoulders top right here, breaking through that. Every sign, every star, every view of the crystal ball shows this continuing to the downside very quickly, in my estimation, at this point. So with the semiconductor industry losing strength, well, where's dumb money going to pile in next? Bitcoin reaching near all-time highs again. Interesting. I don't know. Are we forming a bull flag here? Are we headed higher? I'm literally getting Sorry, the word I was looking for is vertigo. Like, soon as I'm literally like feeling the dizziness of this market being so high. Again, I wish anybody that is holding and or buying Bitcoin here, I really hope you can find someone else to give you more dollars for your Bitcoin than you paid for your Bitcoin. I do wish you the best. I'm just watching this, sitting on my hands in this market, just flabbergasted at this. It just feels like a manic phase mania in Bitcoin. One crystal ball rating I have is, this cycle since 2020 has been so like high and long. It just makes me wonder if we may be headed into the longest and coldest and lowest cryptocurrency winter, that we've ever seen in the history of cryptocurrency coming soon. It wouldn't surprise me like at all, by the way, if that were to occur. But again, good luck to all y'all with your Bitcoin. I'll tell you one thing, I'm not buying it from you from a higher price, at least not now. Again, yeah, 91,000, that might be a really, really cheap price for Bitcoin in 5 years and 10 years. That could be like an unbelievable deal, maybe, and maybe not. I really don't know. And I really don't care. Moving on to oil today, getting basically to this longer term trend line that we've been bumping on now for years. This trend line going back to 2021, hitting it 1, 2, 3, 4, 5, 6, 7, 8, 9 times. We just keep knocking on the door, knocking. Good chartists will say every time you knock on a door, it gets weaker. And so it's hard. It's not hard to imagine breaking through this line very soon. And if we do, I mean, this could really be the one that like brings everything down in price. That's when you see disinflation, deflation, and that's when you see the emergency Fed meetings come in and say, oh, darn it, and you get the Powell memes with the money printer going again, and all exciting stuff. It seems like it might be coming here now. We're literally just bounce. Literally, this is a head and shoulders pattern, by the way, in the middle of all of this. So this isn't like the top. This isn't like a perfect head and shoulders, but it resembles one, and it does have similar psychology to it. And so this could literally be it. Like, we could have Monday be the day that cracks it. Yeah. So, fascinating time in markets right now. Last chart I want to bring up today is wood. I've been talking about this head and shoulders top breaking recently. We're just headed up. Like, again, it's like a kid with a crayon just drawing it like, oh, well, we got to retest it now. So the idea is we bounce off of the line, and as long as we don't cross it and confirm above that line, then the probabilities favor very, very well, strongly, even more strongly, once we retest the line, to get down to the target of this pattern being around $73 in the ETF wood, which also is, for me, a great leading indicator as where things are headed. I mean, the demand for wood spells out what home builders are expecting to build homes for people, and what, or people, building homes for themselves or adding additions to their homes. It all spells out a, economic slowdown, really. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.